Okay, I think we're going. Good afternoon, guys. This is Simon with toughtrader.com and Trade and Perform Coaching, doing the market review for November 21st, right? So a couple of pieces coming into the day that are very important. Before we get started, quick disclaimer. Let me throw that up. Past performance is not indicative of future results, right? This is for educational purposes only. I am sharing my trade plan with you in hopes that it'll make you a better trader. However, right, do not follow anyone blindly. Make sure you understand the risks of trading futures, that you can afford to lose the money, and be aware you can lose all your capital trading futures. You must have a trade plan down and set so that you know exactly what you are looking for when you are trading, right? You've got to know what it looks like when you lose. You've got to know what it looks like when you're going to win. So coming into the morning, let's set this up coming in beforehand. We were gapping up. We'll go through NQ, then we'll do ES. And actually, let's start on the easy one. Let's do oil, right? We only had one trade location on oil today. Let's spread this out. Okay, so this is a great example of the green zone versus the yellow zone, right? So you can see this morning here, let's bust this down to a time frame we can actually work off of on a 5-minute chart, right? So you will see this morning, right? Early in the morning, 3:30 a.m., we come into the white zone. First time in, push in, and then reject all the way out. Now, the next time in, right? So this is the first time. This is the second time in this session, right? Here's the second time into the white zone, rejection. First time. Actually, this is first, second, third, fourth time in, right? And you'll notice when we get over here, so see earlier how we've come down and we've broken the swing low. We push back up. So I want to show you all something. So what everyone's going to be looking for here is this pushback against the 50-60 off this swing low right here. Because what are traders wanting at this location? So this is just to cover on oil real quick. You've come out of a key resistance area, right? So this is fine. There's nothing wrong with that trade so far or the thought process to it. Again, the idea is to show nuance. I'm not going to go into the profile on this, but I want to show nuance. I'm only going to cover one thing in the profile on this. Here's the swing high. Here's the backside test of critical areas, right? 1, 2, 3, 4, right? So when I come back up, I set a new swing low. That's good, right? I've broken the last swing low. I'm now looking for a 50-60 back. This is the 50-60 back. What do I want to happen here? I now want this trade to push out and push down below my support area. Now remember, the green area, I purposely did not make a white zone. I purposely did not make it a white zone. However, it is still a valid support area, right? So you'll notice when we finally tagged in out of this location, the market did what it's supposed to do. Stan, is there no sound still, my friend? Does anyone have sound, guys? Sound check real quick. Stan's telling me we don't have any sound. Just want to pause for a second. You have sound. You have sound. Okay. Okay, no problem. Okay. So when they're in here, what you're wanting to, this is a normal breakdown pattern, right? We come into resistance. This is the next target back down because we have to get past this support resistance zone to make it lower. Now, everything works beautifully to this point. We come in and test. We backside the 50-60. Here's the first problem. Well, excuse me, we backside the 50-60 right here, right? Here's the first problem. When we come back against this 50-60, we set a higher low. See that? Indicative that the area is holding support. It'd have been much nicer if we had broken this area. So I want you to imagine what it would look like for a good breakdown. For a good breakdown, I would have wanted to see the market. Let's pretend that green zone wasn't there, right? I would have much rather have seen the market have this be my next support area because now I can go, okay, there's really nothing standing in between. So the question comes, what was standing in between me getting from here, which was a good short location, to this area over here? And I can answer that. I'm going to pull over the wrong thing, but I'll get it. I'm going to pull over the profile. There we go. And I'm going to change the profile to oil. Let's see, here we go. Okay, so guys, for the room, obviously the general public watches this, but the concept is the same, right? So this is today's price in oil. This is where we're trading right now, 56.93, right? And what you will see here, without going into details, so remember, I always use profile. Just like any good trader, I've adapted it to for my own purposes, right? So this is where we had the settle price yesterday, right? This is where, right, this is where the majority of the time was spent, and this is where the whole area of volume went off in this location, right? So this is really important. If I don't get below this chunk of build, right, strategically, if I don't get below here, just like on this day, if I don't get below here, I'd have no short, right? So if I don't get, this becomes my little area of support. I expect it to get defended. I have to get below. Additionally, look on day by day, I am one timing to the upside, right? So this means I adjust my trade plan when I'm thinking about it, right? If I'm going to adjust my trade plan, I'm going to go, well, wait a minute. I've got to get below here. I've got support underneath. I'm one timing to the upside. Guess what that makes me want to be, okay? What I'm hoping is that I can get down and stretch for a long out of this area. What I would have rather done is come in, stretch down to my white. It would have been nice if we could have broken above the white zone, come down and stretched back into it and push. It just didn't set up that way, right? I can only set it up the way the market's set up. So instead, what happened was, right, if we clean all this up, oh, can't operate it off that computer. There we go, right? If we set all this up, this became my resistance. So first of all, we opened inside yesterday's value. Immediately, I start thinking. Oh, by the way, David, if you can hear me, I sent you an email. If you can take a look at it when you get a chance, please. Thank you, sir. We opened up inside value. What do I know immediately? Slow, grindy, chop, right? What does it do? We just grind up to our point of control, right? We never fell out of value. It was just slow and grindy through the Asian session. When we came in, we came up, we rejected. This area in general is where I expected rejection, right? Then we pushed above. What happened when we pushed above? Well, look how big our point of control is through here. 1, 2, 3, 4, 5, 6, 7, 8, 9 periods. It's very hard to push away. We get good excess at the high, I think. Let me check that to make sure it's not a double print. It is 2 periods. I apologize. It's not 1. I think that is correct. Let me make sure I have that right. Oh, I stand corrected. It's M period. It's 1 period. We have excess at the high. See this? We push, 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 right? Now watch what's going to happen. When we get underneath this seller, he's going to long liquidate, right? And then what's going to happen? The mid of this 50-60, right? So this was a big push. You can imagine visually, right? They really made an effort to get above, right? We have a strong point of control, made an effort to get above. We get below this period, and where does it push right back to? Right back to the point of control and balances out, right? We clearly had to get out of the prior day's value, and we just simply couldn't do it. That explains the price action. So why is that useful? That's the what, right? So the what was, first of all, what was the trade plan? If I go back to what the trade plan was, my trade plan for the day was to use the white zone as a resistance point, right? We all know it's the first and second touch. First touch of U.S. session did give, I want to point this out, before it exploded to the upside, right? Even within the U.S. session, first touch of that U.S. session, that's right here, gave a rejection. What was the rejection from? 56.67 all the way back to 56.52, okay? It was worth 17, it was worth roughly 15 points. Not a huge trade, not a bad trade, but it rejected, right? The next area I'm looking for, right, is for them to push to the back. Now notice I get no rejection bars in the back, right? Notice I get a swing low where they attempt to hold the backside of the white zone, close back in, right? Then notice we close back in one more time above London high. See London high, backside test, close back in. Backside test to London high one more time. See this over here? We push back down. And what are we pushing back down to? Why do we get the response over here? Quite simple. There's my 50-60 back, right? Notice my first time into my 50-60. Here's my swing low from that 50-60 back right here. And I'm now trapped between 2 points. And then this settled out. We're heading towards close, and then the shorts got squeezed up, right? Additionally, when we go to a larger time frame, right, what is my mentality on shorts when buyers are in overall control? I want to be quicker to cover my shorts on pushes out of that white zone, because what do I know? Well, when I come back and look at this from a bigger time frame, which I'm going to pop over to in just a second, right? You got to use all your tools at your disposal, right? What did I say? This is likely going to act as support yesterday. What do? We bang up against the downtrend. Now notice what's happened when you put in the trend lines, right? Pretty interesting. So now you know why the responsive buyers came in, and you can't see that unless you back out, right? We came in, we retested the high, right over here. We retested Monday's high, right? And now look how we came down and backside tested and tried to push underneath that hourly trend line, right? Which again, I'm going to pull it in so you can see where it came from, right? Starts all the way up here, right? See how it rejected beautifully on the 19th and into the 20th, right? We came up one more time. We pushed above, rejected back, pushed above this time. See how we get the wicks right at that trend line? I'm not a trend line trader, but those wicks, right? Those wicks pushed back into a critical, into the bottom of this white zone, right? Where they're trying to hold it. And now what are they trying to do? They're trying to break it above Monday's high, and then they're trying to come back for a logical location, which would be probably, if I was going to guess, there's really not much between this 56.94 and 58.10. So my guess is we're going to try to push back somewhere in between that 58 and that 50 and that 57. We'll find a happy place over the next 100 ticks. There's not much standing in its way, right? Where does it get in trouble, right? One more time. Where does it get in trouble on CL? I want to see an impulse push below this area, then some 50-60 back. So what would that look like? I'd like to see a break below and have that be resistance. So if I was going to design this trade and I can have it work any way I wanted, right? Let's say this ends up being the high and we get failure, right? So notice if we were to push down into the old breakout point, right, and the area where we consolidated, I want to show you that's over here to the left. See how we consolidated over here prior to the breakout? That's this right in here, right? So if you look to the left on here, let me bring this in. This was the old breakout area prior to the consolidation that we broke to the upside. So I would love for it to come down, swing right into and retest this breakout area right here to the left, right? Pop back up to my 50-60. Well, I would expect to have a nice juicy swing out of that location for potential pull. Remember, as I gave an example this morning with the British pound, no market goes in one direction or in a straight line. There's always rotations of 50-60s, particularly in commodity products. And if you can wait for it and you understand how to manage it relative to the time frame you're working, you can make an enormous amount of money. Okay, let's move on to ES and NQ, and then we'll wrap it up. I've gone a little bit longer than I wanted to. So let's get rid of this. Okay, on ES this morning, come back over to this. There we go. First thing I noticed is that we were gapping up. We were above all resistance, right? We had, remember, I look at these as my support areas in general. I know I have to get underneath to be bearish. So I have no reason to be bearish relative to where we're opening. I'm above every single major defensive line sitting above me that could possibly push back. I have zero reason to short, right? In addition, right? And I sent this out, a video out to members last night covering this. Look in the first 5 minutes, right? The advancers are hitting almost positive 2,000 out of the first 5 minutes. I identified 3 trades that could be taken, right? There was a so I had no desire to short, right? I said my first trade, if we opened up, would be either the most aggressive entry would have been the close of the first green 5-minute bar to the upside, right? That was my most aggressive entry for a push and what I expected us to close at an extreme today. Check, that worked. You can write that down. I gave everyone in the room a specific way to go back and do your homework on that and collect your stats so that you can trade that on a regular basis, right? Number 2, right? The half gap. Okay, number 2, the half gap. That was going to be my next entry. Obviously never developed. Number 3 entry was going to be at the gap fill, probably with a 4 to 5 point stop. Actually, let's get rid of the probably. I don't like the probablys. I was going to put a 5-point stop at gap fill, right? And I was going to look for push up, and I detailed very specifically why those were the trades I was looking for. Those are your 3 very specific entries. We were above all resistance. Tick was responsive. We opened up obviously very, very strong on the tick. Although I had an interesting conversation with someone today on tick, and it was a little we were talking about how TradeStation measures tick. I'm going to have to look into it, and I will. So long story short, we had very strong advanced decline. You do not want to short that strong and open, okay? I know it works sometimes. It's not worth it from a trading standpoint. Okay, so I have, one second here. Great, thank you. Okay, number 2, NASDAQ and ES were in alignment, right? Again, I'm going to flip back and show the NASDAQ chart. And I have something very specific to show the NASDAQ that y'all should record. Okay. Where is this? Here we go. Here is the NASDAQ. Let's clean this up. Okay, there we go. Okay, notice we gapped away. This is a bullish gap away, right? Notice this is what a pullback to breakout looks like. Notice where we open, right? We open right here at 63.40, and I'm very clear. So remember, I think of these guys as my defensive guys. In other words, everyone who sold at this point, and at this point, right? When we closed yesterday, they're feeling pretty comfortable, right? So someone in the room who was not short said, hey, Simon, we've gotten behind, and he made a great observation, right? He said, we have gotten behind the 62 retrace. That's not going to work if I'm not on the computer. He's going to go, we've gotten behind the 62 retrace, which he was correct. Here's the 62 retrace, and we're probably going to come in and fill over to the left, right? And I disagreed with him for multiple reasons. He wasn't short. He was just an idea he was pointing out. But, right, there's plenty of people who know that when we get behind the 62 retrace, that's usually not good, right? So there's a ton of anomalies in this profile here. The market wants to accomplish 2 things when it's trading, okay? It wants to fix anomalies, right? And it wants the easiest route to push up, right? So if you looked yesterday, the market, I want you to think through this on the NASDAQ in particular. The NASDAQ had every opportunity to break down yesterday, right? Pure and simple. There was no question in my mind. We opened below value. We were unable to get even back to the point of control. It was weak, right? Sellers, if we were going to go down, sellers should have been able to jump on that product and push to the downside, right? Look what they actually did. So we can look here. We can look any way you want, right? If you look at that, here was the push. This push was down on the highest volume of the day. We pushed to the downside, trapped back in. Here's where they head faked everyone. And I always emphasize this to the guys I'm coaching, and I'll emphasize this to the people listening to this video. Time is not a function that the market cares about. Price is, structure is. Time is not, right? Time is something we impose upon the market, okay? This trap never busted. We pointed it out in real time in the room. This trap never busted. Now, granted, you had to carry overnight, which I did not do, right? But you had to understand that this trap was very important, and you had to look and go, really, they should have been able to push down. They weren't. So let me tell you what happened. They fixed this profile. This push fixed this profile. right? We know we have shorts in the neighborhood. Why do we know we have people who wanted to short? Because we end up with a short covering profile in here, right? And if you look at this push on this gap, right, notice what we did. We leapfrogged above to the top end of the value area from the 14th. What did we do today? We leapfrogged to the top end of value of the 17th. Guess what that did? When you leapfrog like this, everyone who was feeling comfortable here and here about their shorts or about their sell, let's say it's not even about shorts, because there's talking about the shorts is ridiculous. There's no professional shorts out there, at least in indexes, right? But the people who were out of the market here were feeling pretty good about themselves until we get right here. And then all these people who got out of the market and were feeling pretty good about themselves go, crap, I got to get back in. Again, everyone who sold up here, everyone who sold here, and right here, everyone who sold yesterday, when they looked at this yesterday morning and they noticed they got past these guys and past these guys, picture these lines of defense, right? All this whole group had to go, you know what? I got to buy back in. We're going to push. And sometimes they understand they're forced to buy back in. If they're professional funds and they've sold calls, they've have various strategies. When the market moves X percentage, they have to push back in. You don't even necessarily need new buyers to push this in, right? This could simply be a strategy where they have to cover calls that they sold and they have to come back in. Realize, so then people ask, I get this question all the time, well, why wouldn't they just cover overnight? They can't. If you're trading U.S. equities, right, and options on U.S. equities, you have to wait till the market opens to be able to cover your position. So you get a whole new flood, and that's what drives that all the way up. This was really a pretty easy read, and you should study these. Again, I've been going over this with guys in my one-on-one coaching. You should really study this. This is a pattern that repeats over and over again, and particularly in the top half of the market, plays out really beautifully. The number one thing you want to know about this is on significant gaps, I would never play for the gap fill. You will get crushed. When we've gapped over the prior day's high, right, and we open with a strong intraday reading, if you cannot bring yourself to buy, certainly don't bring yourself to short. The other thing that people want to do at the end of the day, which I think does not hold a lot of value, is they want to come in and they want to try to figure out how to short the top of these areas. This is not, I assure you, worth it. We are circulating in a 3-point rotation. If you want to find a way to get short, this is not a short market. My suggestion is, if you want to short, wait till you get help. What does help look like? We are trading underneath value areas. So you have people who feel pressure to get out of their trades, right? So when we push into them, right, like we did over here, when we push into them from underneath, they come back and respond with sells. That's where the money is on the short side. Knowing where your trade is, lying and waiting for you, and when you have allies versus enemies, depending on which side you want to be on, makes it much easier to make your trading decision. That's the trade review for today. We did exactly what we planned to do. There's a few people in the room that took longs off of the open. Congratulations to those guys. I did not, right? I didn't intend to trade today, but they did the exact right thing. They took their long off the open. They put their stop below that 5-minute bar, and they made great money, okay? And that was a picture-perfect trade. You cannot get better than that. What was the risk that they accepted? Really important. They accepted the fact that they might have to get stopped here, add here, possibly stopped here, and then add here. You have to understand what your risk is and what this might look like. It's unlikely that we were going to fill the gap, but we could have. When you think in terms of odds, right? When you think in terms of odds, and I showed examples this morning of where we did come in and fill the gap in history, but the opens looked a little different. The opens looked a little different, right? You just have to be simply prepared that that can happen, right? And then, stand out of the way. It's inevitable. Every time you see a move like this for retail traders, you see them trying to fade against this move. They just get bone crushed, right? And what was what we said to do this morning, right? Think about it. What did I say this morning? I said allow at least an hour of sideways trading. I'd say this is about where we peaked, right? This is an hour later, right here, right? This is 2 hours later, right? And notice, if this is where you chose to initiate your short, you didn't make any money, but you didn't get bone crushed, right? Okay, versus trying to short in the front of the day and you're just burning good money. Don't do it. Hold on to your capital. The day's not worth it. You didn't miss anything. You can't miss anything when the thing keeps setting up over and over again, right? You just can't miss a trade. The only thing you can do is, if you have a read and you didn't execute it properly, go back and learn it. Easy peasy. No problem. This is just a repeating process over and over and over again. It repeats different trades. So the one thing I will say, that one trade I'm looking for over the next couple of days to come is a break below on NQ. I'll throw this out for the general public for everyone to listen to. If we trade below 63.4150, then trap back above, right? I want to say that again. If we trade below the low of the day on ES, it would be 25.8950. If we trade below here and trap back above, I will look to be long on NQ. If we don't like giving away my trades to the general public, but I'll throw this away. We trade below this low and we trap back in, I will want to be long. 63.40, right? Those are the two things I'm looking for. Does anyone have any questions? So the what was what do we do when it gaps up strong, right? That's the what. The so what is, it's important when we gap up strong because you've likely caught people out who can only cover once the market opens. They're going to be highly motivated when we have traded above prior day's high to be forced into those positions. Those are institutional positions that those guys have no choice of bringing in. Either they're having to cut risk or increase risk based on their models, and they are not thinking like you and I are. This is the definition of other time frame. They do not care. They are not looking at resistance. Even though this was a white zone, we wiped off the short right out of the gate. That saves us a ton of money, right? The now what is go back, study what that looks like, and if you wanted to take advantage of it, figure out how you could have either resized or if you could have accepted the stop from the buying the close of the first 5-minute bar with a stop at a low, and then go back and do your research for when we get the exact same setup, which again, you can push back far enough in history and figure out if you took that trade 10 times, what would your stop be? What would your win rate be? And your RR should almost be 4-to-1 on this, 3-to-1, 4-to-1 on the RR, especially in the NASDAQ, same thing in ES. Okay, so that's my 2 cents, guys. Do your homework. Whether you had a good day or a bad day, journal. Journal about what your emotions were, about not being long, about the market running away. The more familiar you are with your subconscious responses to what happens in the market, to your time spent in front of the screen without getting reward, right? The more clues you will unlock to getting better about how you are as a trader, right? You're pissed off that the market gapped up and didn't give you an in? Write it down. How did you feel? How did you respond? What did you want to do about it? You're pissed off because the market, you had the low yesterday and it never rallied. Write it down. How did you feel about it? How did you respond? A lot of people, in a weird way, they would have the long yesterday, which I did, right? Would have had the long, saw that it rallied up all night overnight, and will often respond with, I'm going to short that, right? That's the response. I'm going to short because I didn't get the long. There's no logic behind it. It's an emotional response, right? Write it down. Be aware that that's what you want to do and stop, right? God, if you can't make money, don't lose it. That's the number one thing, right? You got to be aware of who you are and how you respond to various market situations. And then I have one last thing that I'll reiterate. If you were trading 400 to 500 contracts, where would you want to trade, right? Where would you want to trade from? And would you still be scalping for 1 and 2 points when you would try to make 5 and 6 and 10 points when the market sets up correctly? And which one do you want to be an expert at? Most people cannot make a string of 10 to 20 decisions in a row at a high level. However, you can make 2 to 4 high-level decisions through the course of a day and do very, very well. So I hope this helped you guys. I want y'all all to make money. That's my goal, is to help y'all make money, and you can do it in the market. Not a lot of scalpers do it. A lot of guys who use scalp setups to turn into swings and they get their RR straight, they do, and I'll continue to push for that in the room. Thank y'all for joining. I hope everyone has a happy Thanksgiving. I will be doing the preview for the members tomorrow morning. I'm not sure I'm going to air it on YouTube, but and then I'm out of here. After that, I have a coaching session, and then I am parking it. So anyways, talk to you later, guys. Have a wonderful day, and thank y'all for attending. Congrats to those who got the long today.